Welcome back to the deep dive. Really excited today because we are jumping right into, well, one of the busiest times on the financial calendar, earnings season. And this isn't just, numbers. It's kind of where the market's next big moves get decided almost in real time. We've gone through a ton of your sources, company data, analyst predictions, market notes, and really our goal today is to help you cut through the noise, translate that jargon, and figure out what actually matters right now.
That's absolutely right. And it's about to really kick into high gear. Just looking at the watch list you sent over, we've got, 24 companies reporting in just the next 10 days alone. So yeah, it's a super important period, not just for the individual stocks, but, for understanding those bigger market surprises or shifts that often come out of these reports.
Okay, so let's just quickly back up for anyone maybe newer to this. What exactly is earnings season, fundamentally, and why does it feel like such a big deal every single quarter?
Sure. So basically, it's this period, usually a few weeks long, right after a company's financial quarter ends. And that's when all the public companies have to come out and share their financial results. You hear about things like EPS, earnings per share, that's literally the profit per share of stock, and revenue, which is just total sales. Pretty straightforward stuff.
Yeah.
But why it's critical? Well, these numbers, they can instantly move stock prices. Like immediately. They shape how people feel about whole sectors, influence investor mood overall. It's a snapshot of how the company did, but maybe even more importantly, it's about what they expect to do next. And that forward look, the guidance, that's often what really drives the market reaction.
Okay, guidance. We'll definitely come back to that. But speaking of reactions, let's talk about the heavy hitters, tech and streaming. Some massive names here. What should we be looking out for?
Right. Well, we've actually already had a couple of big ones report. Netflix and Taiwan Semi, TSM, they both reported back on July 17th. And interestingly, both of them beat their EPS forecasts. Pretty comfortably, too.
Okay, so what does that tell us? Netflix beating expectations.
Yeah, I mean, for Netflix, it suggests maybe consumer spending on things like streaming is holding up, better than some feared, despite maybe economic headwinds. Kind of pushes back on that subscription fatigue idea.
Right. And TSM.
Well, TSM, their results are huge because they give us a read on demand for advanced chips globally. So solid numbers there point towards, health in the tech supply chain overall, not just for them. It's a broader signal.
Gotcha. Strong signals then. But looking ahead now, the really big ones are coming up fast. We've got Meta, Alphabet, Tesla. I mean, those three could seriously set the tone for tech next week, couldn't they?
Oh, absolutely. Huge influence.
So when are those reports dropping? And what are the technical things you're really watching, maybe beyond just the headline profit number?
Okay, so dates for the calendar. Alphabet is July 23rd. Tesla, same day, July 23rd. And then Meta Platforms follows up on July 30th. And yeah, you're right. It's not just about the top-line revenue. The real insights, I think, will come from, two main areas. First, advertising revenue trends. Are businesses still spending big on digital ads? That's key for Meta and Alphabet. And second, cloud computing performance. Are companies still investing heavily there, or are we seeing some belt tightening? That's critical for Alphabet and also
Microsoft too, right? They're still looming out there.
Exactly. Microsoft hasn't scheduled yet, but they're another massive piece of that puzzle, especially on the cloud and AI side. Their insights will be just as important whenever they report.
Okay, so that's the tech landscape. But let's shift gears a bit. What about the companies that, reflect more of our everyday spending? Retail, consumer goods. What's the pulse check there? How's the consumer looking?
Yeah, this is where we get a really good feel for the health of the average person's wallet, so to speak. We've got some giants reporting soon. Walmart is August 21st. Target is August 13th. Amazon reports July 31st, and they're interesting because they bridge both tech and consumer spending, right?
Yeah, true.
And then there's McDonald's, a real staple, reporting August 6th. What we're watching for here isn't just, did they hit their sales targets? It's more about how they talk about consumer behavior. Are people shifting? Buying more basics, less discretionary stuff? Are they trading down to cheaper brands? That commentary tells us a lot about whether people are feeling confident or maybe starting to get a bit nervous and pull back.
Right. Those are definitely key bellwethers for confidence. Okay, so moving from the consumer directly, what about companies that kind of signal broader economic activity, industrials, manufacturing, those crucial chip makers, again, the cyclicals?
Yeah, definitely. So back in the chip sector, obviously, all eyes are going to be on NVIDIA. They report late August 27th. And AMD, Advanced Micro Devices, is August 5th. NVIDIA's earnings are, They're expected to be a real volatility magnet.
Okay, volatility magnet. What does that actually mean for listeners?
It just means that because expectations are so high, especially around AI chip demand and their future forecasts, any tiny deviation up or down, but especially down, could cause really big swings in their stock
Yeah.
price. And it doesn't just affect NVIDIA, it ripples through that whole semiconductor and AI ecosystem. So yeah, it's a high-stakes one.
Definitely sounds like it. Who else in this broader group?
Well, beyond chips, you got Caterpillar. They report August 5th. CCAG gives us a really direct look at, global construction, infrastructure spending, mining activity, big economic indicator. And then an interesting one is Deckers Outdoor Corp. They make Uggs, but also those really popular Hoka running shoes. They report July 24th.
Hoka, yeah, they seem to be everywhere.
Exactly. But sentiment around Deckers is a bit mixed right now. Analysts are really watching for signs of decelerating growth. And that's not just jargon. If a super hot brand like Hoka starts to slow down, even a little, it could be a signal, right, that maybe even higher income consumers are starting to watch their spending on non-essential stuff.
Ah, okay. So that decelerating growth could have wider implications for retail then.
Potentially, yeah.
Yeah.
It's a key thing to watch in the discretionary space.
Interesting. Okay, let's narrow the focus again, maybe zoom in on restaurants. We talked about McDonald's. But what else is cooking in that sector? What can those reports tell us about dining habits?
Yeah, quite a few interesting ones here. Shake Shack is July 31st.
Mm-hmm.
The Cheesecake Factory reports July 29th. Yum Brands, that's KFC, Pizza Hut, Taco Bell, they're on August 5th. And Chipotle is coming up very soon, July 23rd.
So what's the key story with restaurants? Is it just sales?
Not just sales, no. It's also about what management says, right? About foot traffic. Are people actually coming in?
Mm.
But the average check size, are they spending more or less when they do? And critically, how are they managing costs? Food costs, labor costs. There are always big factors there. Are customers trading down to cheaper menu items? Or are they still willing to pay a bit more for convenience or that specific brand experience? That's the stuff we look for. It gives you a direct window into those everyday spending choices.
Got it. That's a really practical angle. Okay, one more big sector to cover. Health, pharma, biotech. Often driven by different factors, like drug pipelines, right? What's
Yeah.
on the radar there?
Definitely driven by unique factors. A huge one is Eli Lilly. They report August 7th. For Lilly, I mean, everyone is watching their new drug sales, especially the weight loss and diabetes drugs, and any updates on key phase 3 trial data. Analyst targets for Lilly have been creeping higher and higher, so expectations are already, pretty elevated. Makes any potential miss more significant.
Right, high bar to clear.
Exactly. We also have Dexcom. They do glucose monitoring tech, reporting July 30th, and Regeneron Pharma on August 1st. These reports give us insight not just into the companies themselves, but also broader trends in healthcare innovation and how quickly new treatments or technologies are being adopted.
Okay, wow. That is a lot of information coming at us in the next couple of weeks. So this is where it gets really interesting, I think. If we pull back and look at everything we've just discussed, what are the big overarching takeaways? What's the real signal we should be listening for amidst all this noise?
Yes, a great question. What's kind of fascinating is you can almost see two main clusters of activity, or volatility clusters, if you like. The first is around July 29th to the 31st. Then there's another burst around August 5th to the 7th.
Yeah.
You should definitely expect the markets to be pretty active around those dates.
Okay, so mark those dates down.
Definitely. And another key thing is, a lot of companies are actually coming off periods where they beat expectations last time. So the bar might be high. But the critical thing to watch this cycle, maybe even more than that headline EPS number, it's the guidance. What companies say about the next quarter or the rest of the year. Specifically, lowered guidance is a huge red flag right now, even if they just reported a decent quarter.
And margin commentary, too, you mentioned.
Yes, exactly. Margin commentary. How profitable are their sales after covering costs? Are those margins shrinking? That tells you about inflation, competition may be eating into profits, even if sales look okay. Those forward-looking things, guidance and margins, they seem to be moving stocks way more than just the backward-looking EPS number in this environment. And I'd add, the market seems incredibly sensitive right now. It's been really quick to punish even like minor disappointments.
Yeah, it feels that way, even for stocks that analysts really like, right? Those top picks.
Absolutely. Even stocks where analysts see, double-digit upside potential to their price targets. Small miss on guidance, a slightly weaker margin outlook, and bam, the stock gets hit hard.
Does that quick punishment sometimes feel like an overreaction, though? Could there be opportunities there for people thinking longer term?
Oh, for sure. I mean, that's the classic question, isn't it?
Yeah.
While that immediate market reaction can be pretty brutal, sometimes it does create a disconnect. If it's just a minor miss maybe on one specific metric, but the underlying business is still strong, the long-term story is intact, yeah, that could present an opportunity. It's really about trying to figure out, is this just a temporary blip or is something fundamentally changing for the worse with the company? That's the hard part.
Right. So, okay, let's try and bring this all together for everyone listening. What does this really mean for you as you're navigating all this information? We've heard the next, say, 10 to 15 days are packed with these major reports, especially around late July and early August, potentially leading to more market swings. You've got a list now of some key companies across different sectors: tech, retail, industrials, health, and crucially, what to listen for beyond just the headlines. Hopefully, this deep dive has given you a bit of a shortcut to understanding the market's pulse right now.
Yeah, and I think connecting it to that bigger picture, it really is about trying to pick up on those subtler signals,
Yeah.
not just the big flashy headline number.
Hmm.
Looking beyond that top line, digging into the guidance, the margin comments. That's where you often find the deeper story about how these companies are seeing the world, how consumers are behaving, where the economy might be heading.
Exactly. It's like asking, how do all these individual company stories start to weave together? What kind of narrative do they create about the whole market or different parts of the economy? And maybe this concentrated burst of earnings, what might it reveal about, say, the underlying strength or maybe the fragility of certain sectors right now? After hearing all this, what really stands out to you?
That's a great question to leave people with.
Oh,
And maybe it raises another one. In this flood of information we all face, what signals are you going to prioritize? How will you decide what really matters when trying to understand these market shifts? I think just keeping that curiosity going, really paying attention to how companies talk about their future, not just their past, that often tells you more in the long run than any single quarterly number.